Today we'll be going over some charts. The first one we have is AMD, and right now we're in the middle of the falling wedge, so it means we can still back test support or we can continue and hit resistance. Friday we got a piercing candle close or a rising sun reversal, which is the opposite of a dark cloud cover, where we gap down and really strong into close. So this set up as a possible double bottom with 141.20 being the neckline. And if we can break and close above the neckline, we have a small gap above that can act as a profit target before hitting resistance. And if we break resistance, then we have these targets of 151.20, 156, and all-time high. And then the full measure move of the falling wedge whenever we break out. And as for the downside, if we break 131.40, we have the bottom of the falling wedge to support ourselves. And if this breaks, then I'm looking at around 119.20 for next level of support. Next, we have IWM. We're looking at a inverse heading shoulders, waiting for the right shoulder to close at the moment. We have this neckline around 227.12, which is also this gap entry. If we look back, IWM has been trading sideways for about a year now, and just a couple months ago we had this false breakout. So if we fail to break out this time, we're gonna be looking at trading sideways for a while longer, or we may have a change in trend where we break to the downside instead. But back back to the inverse head and shoulders, if we get a neckline break, we have the gap fill above and the area between 240.70 and 244.60, and also this inverse head and shoulders measured move where we take the height of the head to the neckline and we add it to the breakout, which is about 245 or 246. This is if the right shoulder closes. The inverse head and shoulder will fail if we come back to the head or we come back lower. So the last one we'll be looking at is Facebook. I think this is one of the best place out there to start the year if this fires. Compared to Tesla, Nvidia, Apple, or other big names, Facebook has been lagging behind since October of last year. We've been trading sideways. So what we have right here is a diamond bottom, which is a bullish reversal pattern. It looks like a diamond with the properties of a inverted triangle on the left side and a normal triangle on the right side. It is one of the rarest patterns since we don't see it so often, and it's hard to find a perfect textbook one. So the measured move would be the height of the diamond and add it to the breakout. So whenever we break out of this downtrend, some of the targets include this small gap, this other gap, and then this area between 374.70 and all-time high. So although I think this is one of the best looking charts out there, some things to consider is the week after we have FOMC, and then the week after that, which is earnings. And with earnings, anything can happen. Even if the chart will look for a very bullish setup. If earnings doesn't go as people think it would, it can quickly turn the opposite way. One final thing is that since this is my first videos, expect this more. I use two trading platforms, so you will see me switch between TradingView and Thinkorswim.